Wow, the Bank of Canada just did a jumbo rate cut. In previous meetings, three meetings actually, the Bank of Canada did a rate cut of 25 basis point at each meeting. Now, a jumbo rate cut was delivered, and this was actually 50 basis points, which is huge. This hasn't been done since 2020, but this was expected, and we definitely needed it. Now, what does this actually mean? What do the rate cuts actually mean? Well, if you're in an adjustable rate mortgage, now, before I go into that, I want to talk about how many people think that all mortgages are variable rate mortgages. So if you're not on a fixed rate mortgage, you're on a variable rate mortgage, and that's incorrect. It depends what lender you are with because each lender has a different product. So for example, if you have an adjustable rate mortgage, it's not a variable rate mortgage. An adjustable rate mortgage, your payment actually goes up or down as the mortgage payment changes with the Bank of Canada prime rate changing. So the announcement where the Bank of Canada made a 50 basis point rate cut, your mortgage payment goes down by about $15 for every $100,000 that you owe. Now this is 50 basis points, it's actually going to be $30 a month for every $100,000 that you owe. So for a $500,000 mortgage, since if you add up the other rate cuts as well, your payment is now down by about $375 a month. And a lender in this category is actually Scotiabank. Now, if you're on a variable rate mortgage, your payment amount, monthly, bi-weekly, or weekly, is not changing. It's going to stay exactly the same, but more of your money now goes towards principal and less of your money now goes towards interest. So you're still saving money, but you're not seeing it in your payment changing. And a lender in this category is TD Canada Trust or even Coast Capital. Now, if you have a balance on a secured or unsecured line of credit, secured is usually a HELOC, a home equity line of credit, you will see your interest-only payment go down as well, as those products are directly related to the announcement from the Bank of Canada and the Bank of Canada prime rate. Now, what's in store for future rate cuts? Well, it's going to be dependent on many different types of reports. For example, the employment report, as well as the inflation report. Now, in regards to the employment report, there are a ton of workers right now, but not enough jobs. Now, when it comes to inflation, our target was 2%. We are sitting at below 2% right now for inflation. And the BOC didn't want to see this or say anything about this, but they're kind of panicking. Now, when it comes to our economy continues to struggle. GDP growth is expected to be 1% in 2024 and 1.3% in 2025. Now, their next meeting in December, many are predicting, we will see a rate cut. Many are saying, conservative, 25 basis points. However, many are saying that we might see another 50 basis point rate cut again because it's needed. The Bank of Canada waited too long, and they waited too long to do something about rates and cut rates, and they're panicking right now, and our economy desperately needs this. We had one economist even predict a 75 basis point rate cut, which was very, very aggressive. I was predicting 50. I felt like the BOC won't do 75, maybe in a case of an emergency, but 50 was my kind of gut feeling as well. Now, in regards to the Bank of Canada, I feel like behind the scenes they are panicking, but they're just not admitting to it right now. And the Bank of Canada made a big mistake when they waited too long to increase rates, and now they simply waited too long to decrease rates, and now they're panicking. The Bank of Canada needs to be proactive and not reactive, and they've been reactive for the past few years, and this has hurt many Canadians. It has hurt our economy, and we definitely need to turn around things as soon as possible. Now, how does this jumbo rate cut impact the real estate market or even new borrowers that are coming into the market or want to come into the market? Well, if you're a borrower who wanted to go with an adjustable rate mortgage or a variable rate mortgage, good news for you is that your borrowing power actually has gone up. With the several rate cuts and in the jumbo rate cut, your borrowing power will go up, which means you'll qualify for more mortgage money because the stress test has gone down. So that's good news there. Now, if you are a borrower and you're looking at fixed rates, well, fixed rates had no immediate response. Remember, fixed rates are tied to bond yields, and bond yields in the morning were they spike sharp upwards and then a spike sharp downwards. And there wasn't a massive change. We got to see bond yields continue to trend downwards over a long period of time in order for fixed rates to change. Now, I'm not saying fixed rates won't go lower. They will, but it'll be a bumpy roller coaster ride to lower fixed rates. but there was no immediate response. Overall, as rates continue to fall, we will see more borrowers come into the market or home buyers come into the market. This has been the case for many, many years. As rates go down, many people get off the sidelines and start buying a property. And when many people get off the sidelines, this causes demand to increase, and it has caused prices to go up as well because supply is limited. Now, supply right now, especially in the lower mainland area, the Vancouver market, the Surrey market, is very high. And supply is high, and that's actually good news if you're a borrower, because you have options. You have the ability to search for a home, not be pressured to making an offer, not going to multiple offers as well, overpaying for a home. You have the chance to do your due diligence, get your mortgage set, and just comfortably buy a home that you want to live in versus scrambling and panicking. So we will see many buyers enter the market. Many smart individuals are going ahead with a price now because they don't want to be in that situation where they're in multiple offers later. A tip that we have for a lot of our buyers is if you want to take advantage of future potential lower rates, but today's prices, you could always lock in a price today, make an offer on a home, do your due diligence, remove subjects, give your deposit, and then have your closing date 100, 110 days out. Because many lenders will actually hold your approval for up to 120 days. That being said, as rates continue to fall, you could actually lock in a lower rate. We have many lenders that would do unlimited rate drop requests, and we could continue to ask for a new lower rate. So by the time your completion hits, maybe 3 months down the line, you will have a lower rate, but your purchase price hasn't changed because you locked in your purchase price many months ago, and that has not changed. That is still staying the same. So that's good news there. Just a tip there as well. Also, if you're a borrower or current homeowner and you own a property and for some reason you need to break your mortgage, well, if you are in a variable rate mortgage or an adjustable rate mortgage, your penalties are actually going down. Because with the interest rate cuts, your interest goes lower and lower and lower, and many lenders, or you most likely will have a 3 months interest penalty. So that being said, if you're breaking your mortgage, your penalty is actually going lower. Many other home buyers are purchasing a property now. Maybe they can have a longer closing date. They are maybe taking a short-term mortgage, maybe a 1-year fixed, just to get into the market. And then in 1 year, when the renewal rolls around, they will actually go into a lower rate, or potentially taking a variable now and then locking in next summer, depending what product you have. That's very important because we have some lenders that will only allow you to lock in to a term greater or equal than the term remaining. So if you're locking in next year, you have to lock into a 4 or a 5-year fix, and that is very dangerous. You never want to lock into a 4 or 5-year fixed because those come up with the highest penalties. We actually have a lender that will allow you to lock into a 3-year fixed as of day one. So you have to know your mortgage product. Well, thanks for tuning in. I hope you enjoyed the video. Don't forget to comment, like, subscribe, share, and see you at our next video.